Hello and welcome to the Smart Money, Dumb Money Show. Once again, I am your host, Keith Richards, and today we're going to take a look at oil. I know I wrote a blog on oil recently, and I really strongly encourage you to take a look at that blog. It was called Read This Before You Invest in Energy Producers, and I do recommend that you take a look. And in that blog, I embedded a link to a video interview I did with Lauren Gunter of the National Post and Calgary Sun and all that. He did a brilliant interview and really explained from a man who's involved at a much deeper level than most of us ever will be in that industry from a commentator's point of view. He really taught us a lot about the energy producer situation in Canada. It was so eye-opening. I really recommend you watch it. But today I want to bring up some news to you, and that is that I believe that oil, from a technical perspective, looks to be rounding the corner as far as the setup goes. And we're going to talk about the pluses and minuses that could happen to energy, the energy trade, over the coming months. So I like to do PowerPoints for these videos, so I'm going to bring up a PowerPoint on energy. And this PowerPoint is being produced or read on the 13th. I put this together on the 13th of February, and you're probably reading this or watching this, I should say, a week later. So just be aware. Okay, so we're going to start off with kind of working from the consumer's point of view, like the products of oil, and then work down to what the oil trade itself looks like. So if we look at gasoline, that's what we end up using in a big way, driving our cars, and gas for many applications within industry as well. Gasoline futures have come from basically hovering around $2 to around $2.70. Now that's a big move, and we can see that at the bottom of the chart here, that they were very oversold. And times when they get oversold, you'll often see a rally. So we got that rally, but we're seeing also very strong movement on what's called the force index. This is a measurement of both momentum and money flow put together, and it was originally a strategy or an indicator put together by a man named Alex Elder. Elder, and he wrote a brilliant book called Trading for a Living, and I recommend everybody read it. So that's heading up, as well as rate of change. Now, I like using a super long rate of change. In this case, we have a weekly chart and we're using 240 weeks. So this is a long indicator, but I'm looking for those big moves. So this is kind of going from money flow, which is a fairly long indicator, to force, which is fairly short term, and rate of change, which is very long-term looking, but all of these are turning up. So very interesting. There's some resistance coming up at 280, as you can see on the chart. So I want you to keep that in mind, but there's probable reason, as you could say, for this to continue. In other words, for 280 to break, and we see maybe highs in the $4 area eventually. That's to be seen, though, because you really need to break through 280 before we can say it's an absolute. But we have a very good chance of seeing 280 break because of the technical setup and those indicators you're looking at on the bottom of the chart. Now, what could go wrong? Well, this is a quote from Bear Traps, which is a research service I quote from. I've been subscriber for years. And what Larry McDonald from Bear Traps is saying is that gasoline is a problem for CPI, for inflation. And the election team is not going to want inflation going into the November election. So they may just try to reverse that problem. And by the way, assuming it's Biden, but I note here that Kamala Harris is ready to serve. She recently said in a quote, as Democrats sound the alarm on Biden's age, it's not Biden's age, it's his cognitive abilities. We've all heard stories of him starting to talk and then forgetting about what he was about to say and going the wrong way down and tripping and falling. I think he's a classic case of a guy that's probably a little too old to be in politics. So whatever the case, whether it's Biden or somebody else running the show. These guys have a problem if inflation is still raging, in fact, higher, in fact, coming into the election. So here's the problem, is that you might remember the midterms 18 months or whatever it was ago, 2 years ago, and it was less than 2 years ago. And I talked about this on both blogs and videos, and I said, there's so much driven by political decisions. I talk about politics on the videos and blogs because it really does matter to the direction of investment movements. And I'm not kidding you. I've studied this enough to see that there's correlations between government decisions, and you can get a perfect setup like the technicals I just showed you on, say, gasoline, that can fail if we get a government decision that changes things. So Biden made a decision to release and empty the strategic reserves in the USA dramatically. In fact, this was done to help them with the midterms. He wanted to have low inflation, which is, energy is a big component of inflation on so many levels, that he did this strictly for political reasons. It was not to do well by the consumer or anything like that. It was strictly just to make it look good so he could get elected. Problem is, he reserved these reserves by he drew them down to a point where here we are, February of 2024, in the strategic oil reserves in the USA are at 37-year lows. Let me repeat that. 37-year lows, okay? And we're coming into, a Middle Eastern war, a Russian versus Ukraine war, and we've got in the US the supposedly policeman of the year, the superpower, that's supposed to control asset movements and political things and wars, and you've got the superpower with a very vulnerable position. They have, to be exact, I'm looking here, 453 million barrels of oil, which sounds like a lot, but that's not much, okay? So we have a real problem, and so he has a problem. Biden has a problem because he cannot release more oil. Well, maybe he will, because I sometimes think these people just don't give a damn, and they just go ahead and do what they want to get elected, better good for the common man or not. They don't care. It's all about just getting the power. So just keep that in mind. That could be the monkey wrench that changes things, because they're going to be, between a rock and a hard place if the trend keeps moving up for gasoline and other byproducts like diesel. Guess what? Diesel is used in industry a lot. Well, here is a classic example. If you look back in 2019, market fell heavily, made a rally, and came to a higher low and went on to, move considerably up on diesel prices. Look what's happened recently. Market fell, made a rally, and the recent low considerably higher than the last low. Okay, same setup as 2019. This is why we're seeing the futures markets bidding up. So just keep this in mind. So long as nothing crazy politically happens, you probably got to set up for higher prices in the byproducts of oil. So let's look at oil. WTI is the clean stuff. So let's take a look at that. Well, I've talked about this before. $80 to $90 would be a technical resistance point. It's at 76, 77 today as I speak. We could get $80 easily, maybe 90, because we're seeing all these indicators hook up. They weren't hooking up last time I think I talked to you about this. There's the force index, there's money flow, and here is rate of change. You can see all this stuff really moving in favor of at least the old resistance points being touched. So energy sectors, like the actual producers, we've seen this before. I showed it on my blog that I was referring to. There is some upside on the producers from a seasonal perspective, often between March and May. Okay, oil moves actually a little before that, but that's typical. Oil will lead the producers. So that's it for the US side. So on the Canadian side, you've got, and I've quoted this before, Rafi Tasmanian. He noted back on an interview some time ago, about a year ago, I quoted him. He said, Trudeau's policies on oil and the green movement are moranically stupid. Well, those are harsh words, but let's take a look here. And this is one of the things that I talked about. a while ago, which is that the Canadian producers are starting to underperform the US producers, and yet the US producers were underperforming Canadian producers forever. Well, in October of 2021, Guilbeault was uh, uh, appointed as the energy minister in Canada. And, literally within 6 months, the relative performance of the US producers turned around. And it's because of, again, I encourage you to watch the interview with Lauren Gunter. The policies that Canada literally has in the entire world, the most restrictive policies on our oil producers. And it's going to hurt. It is hurting, and it will, and they're quite asinine, quite frankly. And you can see the video on this. But, here we have a guy that, literally came from a Greenpeace fanatic side of the world. He was one of Trudeau's frat boys. I mean, he climbed on Ralph Klein's roof, and while his Klein's wife was alone in her house, scared. And this maniac was climbing on his roof trying to install false solar panels. He climbed the CN Tower. This guy is not your traditional, minister of whatever. He's a crazy frat boy. And so his policies are just completely out to lunch with reality. And I'm not the only one to comment on this. People all over the world are talking about Canada's oil policy. So, and you can see it in the charts. It's not just my opinion. Look what's happening. So this is important. This is, again, I'm talking politics, but, which would you rather own, the outproducing or the underproducing oil producers, if you buy into my technical argument that oil is going to go up? Okay. So I'm delivering a very passionate message here, but this is like investing, and you have to pay attention to this stuff. So let's go with the final conclusion. And I've got myself all riled up here, but we have a very good technical setup for gasoline, oil, and the producers. We have a good setup. There's really good technical reasons I've just given you to get in on the trade. You saw all those hookups on the momentum indicators, etc. Seasonality is very bullish, or is coming into the bullish period until May. Like any time now, you should start to see the producers and oil start to pick up, and they seem to be doing that. The fly in the ointment is political. Inflation is bad for politicians like Biden trying to get reelected. So he might do something stupid, quite frankly, and drain the strategic oil reserves even lower, which is, 37-year lows, but why not? It's more important to get elected. That's the way these guys sometimes think. So my recent blog and video interview on the oil trade is very worth watching and reading. I would suggest that we own oil producers in Canada, but I'm starting to look more at the US side, because I think they've got less political risk as far as the producers go. And I ask you to pay attention to support and resistance points on the charts. So I hope that helped, and we will see you again in another video next week. Thanks for watching.